AI explains car buying. Buying a car is a big decision that involves many factors, such as your budget, your needs, your preferences and your lifestyle. What's the best option financially? That depends on several variables, such as the price of the car, the interest rate, the depreciation, the maintenance costs, the insurance and the taxes. In this video, we will compare 5 common ways of acquiring a car: paying cash for a new car, paying cash for a used car, financing a new car, financing a used car and leasing. Paying cash for a new car. Advantages. You own the car outright and have no monthly payments or interest charges. You can sell or trade the car whenever you want without any penalties or restrictions. You may get discounts or incentives from the dealer or manufacturer for paying cash. You save money on insurance and taxes because you pay less for a new car than for a used one. Disadvantages. You need to have a large amount of money available up front, which may affect your cash flow or savings. You lose money on depreciation as soon as you drive the car off the lot. A new car can lose up to 20% of its value in the first year and up to 50% in 5 years. You may pay more for maintenance and repairs because new cars tend to have more advanced features and technology that require specialized service. Paying cash for a used car. Advantages. You pay less upfront and save money on depreciation because the previous owner has already absorbed most of the initial loss in value. You can find a good deal on a reliable and well-maintained car if you do your research and inspection. You can avoid paying interest and fees that come with financing or leasing. Disadvantages. You may have to compromise on your choice of model, color, features or condition because the selection of used cars is limited by availability and demand. You may face higher maintenance and repair costs because used cars tend to have more wear and tear and may not be covered by warranty or service plans. You may have to pay more for insurance and taxes because used cars are usually more expensive to insure and register than new ones. Financing a new car. Advantages. You can get a new car with the latest features and technology without paying the full price up front. You can spread the cost of the car over several years and make affordable monthly payments that fit your budget. You can take advantage of low interest rates and special offers from lenders, dealers or manufacturers. You can build your credit history and score by making timely payments. Disadvantages. You end up paying more for the car in the long run because of the interest and fees that are added to the principal amount. You do not own the car until you pay off the loan, which means you cannot sell or trade it without paying off the balance or getting approval from the lender. You may have to pay extra for gap insurance, which covers the difference between what you owe on the loan and what the car is worth in case of theft or total loss. You may be upside down on your loan, which means you owe more than what the car is worth, especially if you finance for a long term or make a small down payment. Financing a used car. Advantages. You can get a good quality car at a lower price than a new one without paying cash up front. You can reduce your monthly payments by choosing a shorter term or making a larger down payment. You can avoid some of the depreciation that affects new cars by buying a slightly older model. Disadvantages. You pay more interest and fees than if you paid cash because lenders charge higher rates and fees for used cars than for new ones. You have less choice and flexibility in terms of models, colors, features and conditions because lenders may have stricter criteria and limitations for financing used cars. You may have to deal with more maintenance and repair issues because used cars are more likely to have problems or defects that are not covered by warranty or service plans. Leasing. Advantages. You can drive a new car every few years without worrying about depreciation or maintenance costs. You pay lower monthly payments than if you financed because you only pay for the portion of the car's value that you use during the lease term. You can enjoy tax benefits if you use the car for business purposes because you can deduct the lease payments as an expense. You can avoid hassles of selling or trading the car at the end of the lease because you simply return it to the dealer. Disadvantages. You do not own the car and have no equity in it, which means you cannot modify it or use it as collateral for a loan. You have to follow the terms and conditions of the lease agreement, which may include mileage limits, maintenance requirements, wear and tear charges and early termination fees. You may have to pay extra for insurance because some lease contracts require higher levels of coverage than the minimum required by law. You may have difficulty getting out of the lease if your circumstances change or you are unhappy with the car because you may have to pay a hefty penalty or find someone to take over the lease. The best option financially depends on your personal situation and preferences. If you have a stable job and income, you may prefer to finance or lease a new car because you can afford the monthly payments and enjoy the benefits of driving a new car. However, if you have an unstable job or income, you may want to pay cash for a used car because you can avoid debt and interest charges and have more flexibility in case of financial difficulties. If you drive a lot or travel long distances, you may want to pay cash for a new car or finance a used car because you can avoid the mileage limits and wear and tear charges that come with leasing. However, if you drive less or mostly in the city, you may prefer to lease a new car because you can save money on depreciation and maintenance costs and switch to a newer model more often. If you care a lot about the appearance and performance of your car, you may want to finance or lease a new car because you can get the latest features and technology and customize it to your liking. However, if you are more practical and frugal, you may want to pay cash for a used car because you can get a reliable and efficient car at a lower price and avoid paying interest and fees. With which option do you save the most money? The answer to this question depends on how you define saving money. If you mean paying the least amount of money overall, then paying cash for a used car is usually the cheapest option because you avoid paying interest, fees, depreciation, insurance and taxes that come with financing or leasing. However, if you mean getting the most value for your money, then financing or leasing a new car may be a better option because you get to drive a new car with more features and technology and less maintenance and repair issues. Ultimately, the best option financially is the one that meets your needs and preferences while staying within your budget. Thanks for watching.